The 4-year cycle is dead. And it's not just me who's saying that, Raoul Pal agrees.
Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow.
If you believe in the 4-year cycle, you probably think we're heading into a bear market right now. The halving happened, the ETFs launched, MicroStrategy bought billions, every signal flashed green. But Bitcoin seems stuck, underperforming even traditionally safer assets. The 4-year cycle was never real. Raoul Pal just revealed what's actually been moving Bitcoin this whole time. And it has nothing to do with the halving, nothing to do with any indicator we've relied on for years. There's one lever only the government controls. In 2021, they quietly changed it. One decision, and it triggered the biggest bull run Bitcoin has ever seen. This is why Bitcoin hasn't exploded yet. Why everyone calling for a 2025 top is wrong. The data says 2026. Today, I'm walking you through Raoul's thesis and the exact timeline for what's coming. All right, let's break down what Raoul just said. The ISM Manufacturing Index. Most people have never heard of it, but it's the single most important indicator for understanding Bitcoin's cycles. The ISM measures the US business cycle, tracking economic expansion and contraction. Bitcoin doesn't follow the halving, it follows this. Let's look at the data. Every major Bitcoin top has aligned with the peak in the ISM, 2013, 2017, 2021, all of them. The halving gets the credit, but the ISM has been driving the entire move. Even in 2021, Bitcoin peaked at the same time the Nasdaq Tech Index did. Do you think Bitcoin's halving pattern is more important than the biggest tech index in the world? Equities are clearly more important than the 4-year cycle. Correlation doesn't equal causation. The scary part is, the ISM hasn't reached its parabolic phase yet, the same phase that caused massive Bitcoin peaks in the last 2 cycles. The 4-year cycle was never just about Bitcoin. It was about the business cycle recycling every 4 years. The halving just happened to line up. But here's where it gets interesting. That pattern just broke.
In 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced. Whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet, but this one is a 5-year cycle.
Raoul just mentioned rates and the debt rollover. Let me explain why this matters. The US government has to refinance trillions in debt every year. When rates are high, the cost of servicing that debt explodes. So the Fed has no choice. Rates have to come down, not because they want to, because otherwise the entire system collapses. But here's the problem. High interest rates make traditional assets more competitive versus Bitcoin. I mean, why buy a volatile asset when you can get 5% risk-free in a savings account? This is what Raoul means by Main Street earnings versus scarce assets. When rates are high, money flows into safe yields, not Bitcoin. When rates drop, that flips. Cash loses value, bonds become unattractive, and liquidity floods into scarce assets. That's when Bitcoin really moves. Just look at the data. Bitcoin tracks global M2 money supply almost perfectly over time. When liquidity expands, Bitcoin rises. When it contracts, Bitcoin consolidates or drops. Right now, we're in a transition. Rates are still elevated, liquidity hasn't fully returned, but when it does, and the ISM enters its expansionary phase, Bitcoin will catch up fast. This is what drives everything.
5.4-year sine curve. 5.4 years is the exact average weighted maturity of the debt, and it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
What Raoul just said changes everything. Let me show you exactly what this means. In 2021, the US Treasury quietly extended the average maturity of government debt from 4 years to 5.4 years. One policy decision, and it stretched the entire business cycle by over a year. This is why the 4-year cycle Bitcoin is dead. It's not that Bitcoin changed. It's the underlying driver, the business cycle, got extended. Raoul mapped this out using a 5.4-year sine wave, and it lines up perfectly with the ISM's current trajectory. The ISM should peak in 2026, not 2025, 2026, which it has for every single cycle. That means the top isn't coming when everyone expects it. This explains everything. Why Bitcoin's high didn't feel euphoric like previous cycles, why the rally feels more stretched out than ever, why we're seeing a slower grind compared to the explosive move of cycles past. The reality is the cycle just got longer. The 2013 cycle ran about 2 years. The 2017 cycle stretched to 3.5 years. The 2021 cycle, almost 4 years. And now we're in a 5-year cycle. Even though the cycles are stretching, Bitcoin is still trending along the same logarithmic regression bands that it's been following since 2011. We're not in uncharted territory, just a longer version of the same pattern. And the multipliers are still playing out. The 2013 cycle ran 20x from bottom to top. The 2017 cycle did about a 7x. This cycle, 3 to 5x from the bear market lows. This puts Bitcoin somewhere between 180k and 300k at the peak. But here's what's different this time. Institutional adoption, sovereign adoption. MicroStrategy owns 650,000 Bitcoin. El Salvador made it legal tender. Companies are adding it to their treasury. JP Morgan and Vanguard are now supporting. This isn't retail speculation. This is real capital allocation. And when liquidity starts expanding, when the ISM enters its expansion phase, when rates come down and M2 starts climbing aggressively, all of that institutional demand is going to collide with Bitcoin's fixed supply. That's the setup for 2026. Now let's zoom out even further. The dollar has lost 98% of its purchasing power since 1913. And that trend isn't slowing down, it's actually accelerating. Look at the last 5 years alone. M2 money supply exploded by over 40%. That's the largest monetary expansion in modern history. And it's showing no signs of stopping. Governments can't stop printing. They're trapped. The debt can't be paid back, and it can only be rolled over. And every time they roll it, they need lower rates and more liquidity. If you want to stay updated on how this plays out, make sure you're subscribed to the channel and turn on notifications. I'm constantly tracking ISM, liquidity, business cycle, risk assets, rate cuts, and Bitcoin's positioning and price action throughout the entire cycle. I'll make sure to keep you updated with what happens. Next year could well and truly be the year that the 4-year cycle is deemed dead. It's going to catch a lot of people off guard, and it's going to shape the way people think about Bitcoin forever. I'll see you in the next one. Peace out.